Well, first of all, your thoughts on the impact. I read a note by Standard Bank earlier today saying that this is going to be significant for the sector.
Yeah, it's a big policy move we've seen here by the federal government. We think the impact is going to be big if it does happen, because you're looking at levies jumping from 5% to 20% for companies that we enjoy pre-tax margins of around 7%. So you can imagine the kind of impact that would have on all of these companies. But the big question we have in our minds is, do we have enough cassava to feed into this process?
Indeed.
Our research shows that Nigeria currently produces about 45 million tons of cassava. And of course, out of that gives us about 125,000 tons per day. Out of that, you would agree with me that a lot of it would be of low quality, and then maybe a significant chunk would go into the production of gari and other cassava-based local foods. Right. So what then can feed the flour mills? So that is another question we need to answer. That
is the big question. But this is not. I'm speaking to some of the CEOs of some of these flour millers. This is something to some extent that they've been anticipating, and the thought of bringing cassava flour into the mix of what they make today. How prepared are they right now in making that transition?
A few companies have already begun to set up farms. For example, flour mills we know has farms that it has set up. But again, I don't think we've seen any kind of large-scale plan to get this policy going. So I think it's going to be quite tough to attain critical mass in the substitution of cassava for flour. So we'll see how that goes, really.
And let's just look at the companies listed. We have flour mills. Its share price is down 10%. Honeywell flour down about 40%. Dangote flour down 67%.
It has taken some big
it's been a tough year for the sector. But are any of those stocks looking attractive in your books? And then also bear in mind the impact that this policy is going to have on those stocks.
Another thing, before I discuss the stocks, another thing we must consider is that these companies make more like an input to staple food, so they can very much pass the cost on to consumers if they wish. So in that sense, we don't think it's going to have a significant impact on their margins. But looking at the companies, the company we like amongst the three is flour mills. It's a food group that was well diversified along the food value chain. If you're looking at anything from port operations into manufacturing, into packaging, and then distribution, it's a whole suite of value that flour mills presents to the investor. Already you know about the sugar plantation that is coming on stream. That should be another good source of income. And of course, it's market leader in the flour space. And you have other diversified business. They're into the feed mill business, for example. The cement business, discussing with the company, was an opportunistic play. But of course, they've sort of like tried to cushion the effect of what may be a gradual wind down in the cement revenues by investing in the UNICEF. So flour mills is a fantastic story for us. We like the growth potential.
And of course, they recently raised money to a rights issue. All right, let's talk a bit about the wheat price. Obviously, that has had a bearing on flour millers recently. I know that many of them have increased prices as much as 20% this year. What's the outlook for that in your books?
To be honest, no one has a crystal ball. I mean, it could go any way. But then again, if indications are that Europe might run into a recession, and of course, the overall impact of that might actually see global demand for commodities weaken a little bit, and so you might want to tend to decide that there might be some price declines, which will be good for the flour millers anyway, because they're able to get cheaper inputs. But of course, 2011 has been a tough year for them. Commodities prices hit recent highs in early parts of this year, so that had a significant impact on operating margins for these flour mills.
And let's look into next year. Obviously, there's going to be the removal of fuel subsidies. That's going to have a bearing on consumer spending ability. Your thoughts on consumer-focused companies like flour mills and Honeywell flour, Dangote flour, your thoughts on how they're going to cope with these changes?
Yes, increase in energy prices is going to really have a significant hit in consumer purchasing power. But then again, you have to look back at the kind of commodities that these companies produce. It's essential.
Right.
Everyone has to eat bread every morning. You know,
most people
you need to take cereal every morning. You know, so I mean, I really don't see that affecting demand per se, because what they make are essential foods. So they will continue. Other things would suffer. Definitely not food.
Your thoughts on stock like Nestle, for instance? Obviously, the highest price stock on the NSE today.
Nestle continues to be a stable performer in the Nigerian food space. It has very strong brands, which we all know. And a company like Nestle is known for its quality, it's known for its consistency, it's known for its good corporate governance. It will be a stock that a lot of people would continue to put a lot of money in as we go forward. In terms of operations, I think, again, what they make is basic food, cereals, breakfast food. So I really don't expect such policies to have a significant impact on a player like Nestle.
But what about valuations? We know, for instance, many of these consumer-focused companies have outperformed the market this year,
Yes.
particularly the brewers. Yes. But some are of the view that some of them are now looking a bit pricey, that there's a big chance that we might see a correction for some of them, even the likes of Nestle, for instance, notwithstanding the strong demand for their products.
I wouldn't share that view. I think these companies have been a good store of value. In times where there is a lot of uncertainty, you see monies, attract this stock despite the kind of valuations we're seeing. I mean, Nestle is trading, somewhere around 25 times PE, and if you check the history, it had always traded above a 20 times earnings. So I really don't think there will be much correction on that part. Again, you look at the sort of investors that are chasing these stocks. Many of them are institutional investors, PFAs. Those guys are not going to dump good long-term investment, good quality names for any other thing. And of course, it all depends on the outlook for next year. If they're going to exit these quality stocks, that means we must be seeing should I say, a bright outlook for the entire market, which as we stand here today, I don't know what your views are, but my views are, I think 2012 is going to be a really tough year for
calling, like you mentioned, calling the market can be very tough sometimes. Thanks a lot, Pabina, for joining us.